Welcome back. And let's kick off with some other requests. And the next one is Remgro. Now, this is one of my old favorite stocks. I know the stock is struggling the last couple of years, but I mean, they've unbundled and they also a good counter. And if I look at this chart, I can remember a few weeks ago, I said to you that I will actually look at Remgro when it gets close to this 90 Rand level. Well, we a little bit past that now. And then we got to a point where we say if this 40-week moving average, there you are, there's the 200-day or the 40-week moving average as everybody knows it, that can turn into a support and the stock can maybe consolidate above it, that will be seen as positive. Well, what happens is there's the 40-week moving average, and what do we see? We see a low, a higher low, a higher low. So it tells you, if you look at that, it tells you that the momentum is clearly to the upside, and this share is slowly but surely building up some momentum for maybe some higher levels. Now, Kelvin asked about it. Kelvin, the big thing is if you did buy it, I don't know if you did buy it or you were holding it or you just wanted to ask about it. The big next step for this share, Remgro, will be when it gets above this line. Now, there's the next resistance. The next resistance, and remember, this is a weekly chart, so I use a Friday close to make my decisions on. Now, just for interesting, a weekly chart is usually used by medium-term investors, and a 40-week moving average, they like to use it as monthly investors, and for daily guys or short-term traders or traders, speculators, they tend to use maybe a moving average of 3 and 8 days. So this big resistance is sitting at 122 Rand and 1 cent. If it gets above that, Kelvin, it will give us our next higher high. So a next technical buying opportunity. So if you do buy it above that 122.01, make use of a stop loss of 109.49. This chart looks beautiful. It shows you that the momentum is turning to the upside. And as we know, for any long-term investor, when a chart moves above the 40-week moving average, it is always seen as bullish. Let's look at Richemont. And Liu asked about Richemont. I think he's happy with his share, but I think he's looking at locking in some profits because the share price assisted him quite a lot. Sorry, but if I look at Richemont, Richemont was a few weeks ago 190 Rand. Now, of course, the Rand is reasonably strong. What I don't like about Richemont is the following. I see here a skew head and shoulder. Now, skew head and shoulder formation is not that valid because you always want this neckline to be as horizontal as possible that you can get. But it's still a head and shoulder formation. There's the left shoulder. And you've got the head. There's the right shoulder, and it's playing or it's working on another right shoulder. Where's the neckline? The neckline sits at 156.07. So if the share price breaks below 156.07, we can see once again two targets of the head and shoulder forming and playing out. There you are. It's from the top of the right shoulder to the neckline to the downside there, projected. And what do we see? If it breaks the neckline and it projects from the head to the neckline, where can we go to? I mean, we cannot believe it, but then Richemont can you believe it, go and close this gap. There you are, there's your target. You can just see I take it to the left hand side, and where's the gap? The gap sits between 151.05 and 147.65. So Liu, just be a little bit careful. If the Rand doesn't come to its rescue here, then something is wrong here. Then maybe Richemont can maybe slowly but surely disappoint us. And interesting, I looked at the weightings of the top 40 recently, and Richemont is one of the heavy players there. So just be a little bit nervous. If Richemont does not perform, maybe your top 40 index will also struggle a little bit. Well, let's have a look at clicks. Nelson wants to know about clicks. Clicks, of course, we know it's not a Mickey Mouse company. It's a massive distribution company in South Africa with a lot of retail outlets, and they are big into medicine. And I mean, the momentum of this stock is just beautifully to the up. Okay, from June from 239.73 all the way up to about 306.90. Wonderful. And the big resistance here is this share needs to get above the top of this little candle. I just want to show it there. If it gets above, and there you are, there you are. If it can get above that candle, let's maybe zoom it out a little bit so that you can see. If it can get above 307.74, this flag formation that we're seeing here, now we know by now that the flag formation is a bullish formation that usually happens after what we see. After a beautiful rally, you find a place where the share consolidates for maybe a 10-day period or a 14-day period, and then suddenly it breaks above that resistance line and it pushes higher up to, let's maybe 10 Rand or 15 Rand in this case of clicks. So my big thing here is it must stuck in this consolidation, but to give it another boost to the top side, it must bounce above this line, and that line is sitting at that 307.74. So Nelson, if you want to buy it and you want to chase the momentum, you can buy it there above that level that I gave you. But where's my stop loss? My stop loss will be 297.29. If the share gets below 297.21, then what can we see? We see that there's a top there, there's another top there, then it's a double top, and below that line it can give us then a sell, and it can maybe take the share down to that level of 286.53. For the moment, I mean, the stock is beautiful, it's strong, it rallies away. I just want to check something else here. Maybe we must just check the 200-day moving average and just see how is that moving average performing. Is it close to that? Because I tend to use that just to give me a little bit of a guideline if the share is still healthy. Oh yes, the share is very, very healthy. In actual fact, it's too healthy. And why do I say that? If the share breaks away from its 200-day moving average and it runs completely away from its 200-day moving average, I always get nervous, because the tendency is when it comes back to test this 200-day moving average, and from there maybe it can go higher again. So just be a little bit nervous, Nelson. Maybe the share has just rallied a bit, and I hope this is only a breather for you to move higher. Be careful if it breaks down to the lower side. Let's have a look at Tabo's request, and that is the old favorite Steinhoff. Now Steinhoff nowadays, with all the census that's coming out, I mean, I've got a friend that's in the law business, and he tells me, Frans, if I must go and study my law practice every day again because I do not understand the census. So for me, definitely not. So if you look at this chart here, you can clearly see that traders are not sure what to do. Just have a look here at this massive bearish engulfing candle. That tweezer top is telling you that there is some sellers around. But what do we know? We know over years that if you do find what we call a symmetrical triangle, and there you are, I just want to draw it in so that you can see. There's the symmetrical triangle. And I just want to draw the bottom line in. You can clearly see, when you see a share like this heading into a symmetrical triangle, you know that the share is going to break to the upside or the downside. What is the important thing of a symmetrical triangle? The important thing of a symmetrical triangle is, and remember this is a daily chart, this triangle can either break to the upside or to the downside. But while we're inside this symmetrical triangle, it tells you that the traders are completely unsure. And while we're doing that, we say only above 314 it can go higher to maybe about 349, but unfortunately below 284 it can move all the way down to 248. So this share is almost in limbo. Maybe just sit on your hands so that we can have maybe a little bit of a direct in time to come. Let's have a look at Vodacom. Rashid asked about Vodacom. There you are. Interesting, Rashid. It's still way above its 200-day moving average. There's a double top here, or even a triple top. There's the one top, there's another top, and that's why the share is struggling to maybe find momentum. But if you want a short-term buy, Look at this beautiful dragonfly candle inside the bearish engulfing candle. And what do I see here? Two lower shadows. There's a lower shadow. There's another lower shadow. So it looks like Vodacom can maybe give us a little bit of a bounce. And let's have a look here. The bounce will come if it breaks above this little line there. And I just want to draw it in. If it breaks above 138, it can easily give us a little bit of a bounce, maybe back to these levels of, and I'm going to call them out, 139, 139.56, 139.81, 141.99, and maybe back to 144.18. But then we know this dragonfly is telling us that the guy's bought in the dip. It needs to break above that resistance line. And where's my stop loss? My stop loss will be the lower shadows low, and that will be 133.53. Low 133.53, you know that you are wrong. But there's something else. Below 133.53, I see something else. If it bounces and it comes down, there you are, left shoulder and the head, and then you have a right shoulder right at that neckline, and then the share can maybe pull back all the way down. This 200-day moving average sitting at 128.24, and then you will have this classic scenario that the share always tends to come back to its 200-day moving average after such a beautiful rally. Well, thank you for watching the show. Please visit our website www.fransklerk.com for more info on shares. And remember, we've got a lot of training videos on there. Just go and visit and you will see. And I will chat again. Enjoy your rest of your week.